What's up, guys? Welcome back to another video. In this video, we're going to be talking about not forcing your trades. So a lot of people have trouble identifying when there's actual supply and demand in the market, when to actually get into the trades, when to know what the right moves are. Now, you're not going to be able to accurately predict every single right move, but this is going to help you increase that percentage of taking the right trades and trading during the right times. All right. So before I get into that, you guys already know all our services. Mentorship link is in the description, right? You have our ebook inside the description as well. That's an alternative to the mentorship. You can contact me on Instagram. You can contact me on Telegram, right? Those are the two main things that I use. So contact me on there if you have any questions, whether it's about the mentorship or the ebook, or if you want a one-on-one session. All right. So anything like that, any questions that you might have, things of that nature, contact me. So we're going to be jumping straight into it, guys. We're going to be talking about GU. Now, as we know, guys, GU has been bearish forever. We know GU has been bearish ever since we had this major distribution up here. All right. So ever since that major distribution, we've just been seeing lower prices. Okay. We've just seen the market just walk itself down and very cleanly. Okay. All of these are opportunities to sell the market. Okay. And we still have a lot more opportunities to sell the market. So going into current price action, right now, we can talk about, let's say, the last week or the last 2 weeks, I believe it was. This reaccumulation, right, this buying pressure here that was created during, let's say, what is that, pre-New York? I'd say like an hour before New York opened. So like right at the end of changeover, okay? So we had this huge manipulation that broke the supply zone. Once that happened, we see this huge impulse. So what does that tell us? That tells us there was actually some buyers here, okay? With that being said, guess what we're going to look for? We're going to look for a possibility to hedge. So possible buy opportunity to come back into our overall supply zone and to sell the market right back down. Okay. So that was the idea that we had on GU. Was that the smartest idea after seeing this price action? We could say no. But what could have been going through our heads while this price action was going on? So this is what I want to talk about, because I'm pretty sure there's a lot of people trying to buy and sell within this whole mess that GU was creating here. So this is the point that I'm trying to get to, is to not force trades. So in this case, by us coming down here, and it looks like we tapped into what, the wick, which is not something I was looking for. You can see I was looking for us to at least reach the 50%, which we did. But now I'm not looking for sales anymore, and you're going to understand why. But as you see, when the market came down, okay, even if this was the mitigation, which this is not the mitigation. Why do I know this was not the mitigation? Just look at this price action. All right. Look at this price action. Is there willingness in buyers? No, we can clearly see that, because if there was, we would have seen impulsive moves like we did before, and we weren't able to take out this high. All right. Nothing was able to take out this high that was telling me that there was some real buyers interested in buying this even further. So that is the reason why I just simply was not looking for buys on GU. After this happened, after we came down, we didn't come into the 50%, we didn't come lower to mitigate anything, and I seen this crappy price action, I stopped caring about buying GU. All right. So since then, what were we doing? We were waiting for GU to actually show itself. What do I mean by that? Well, you can see for the past week or two, GU has just been ranging inside this area. So we've seen market go up, market come back down, market go up. And then what have we seen? We've seen a huge distribution form. So what I'm trying to get here is, imagine how much people were trying to buy or sell GU within this price action that nothing was going on. Okay. Where nothing was going on. And how do you avoid that? Well, let me go ahead and compare it to DXY. Even though I know DXY and GU does not correlate like DXY and EU, but that could be a very good example to show you. So the DXY represents the strength of the dollar. Okay. That's all we need to know. Essentially, what happened here? We can see it's kind of the opposite of what happened on GU. Like I said, they don't correlate as strong as EU and DXY does, but this is a good example. And I can talk about EU just a little bit as well. But you can see on DXY, right, we had this distribution. after we mitigate something or an area, supposedly we're supposed to see an impulsive move away from that area, or at least some willingness from the sellers, right? It doesn't have to be, the strongest move, but it has to be an actual impulse. Have we ever seen that from this area? No, we just see the market just slowly, like they didn't even care. You see what I'm saying? So the main thing that you can get from this is momentum. Momentum is really key when you're looking at these markets. You have to pay attention on how these markets react to these areas. All right. So essentially, yes, this is a supply zone, but how did we react from the supply zone? You see what I'm saying? After the market tapped in here, we're just getting this slow price action down, like it doesn't even want to go down anymore. Okay. It doesn't want to go down anymore. And after that, guess what we get? We see impulse to the upside. Okay, the market goes down a little bit, and then we just see slow straggling down. Just slow straggling down. This is a creek. This is what we call a creek right here. Okay, so from this, what can we assume? We can assume that this is just going to be a reaccumulation. So before this reaccumulation even happened, we can anticipate with valid reasoning that this market sooner or later will be a reaccumulation. Why? Because of how weak momentum is from sellers. All right, that is the case here. We can see momentum is very weak from sellers. There is no selling pressure after this distribution. And especially the main reason why is because there is a distribution. When we see distribution, that is a big thing. Okay, that shows us evidence that sellers were actually a participant within this area. So if sellers were an actual participant within this area, we must see selling pressure. If we don't see that selling pressure, what does that mean? Sellers are not interested, right? Or sellers are not able to keep this market going down, or the target was probably already met. And you're probably saying we didn't tap into anything. Well, if I draw a fib here, we tapped into 50%. What I mean by that is, while this market was showing BS buys, you could just been waiting for the sell. Why are we waiting for sales? Because we know GU is overall bearish. If there's going to be one place that you want to take a risk on GU, it's going to be taking the sells. Okay. So recently we just got confirmation that we're starting to sell again. Well, how do we know that? Why did we assume that, right? Well, we can see a clean distribution take place. All right, we have our drives towards the upside. We have multiple drives towards the upside, and it wasn't the drives that gave it away. It was this. This is what gave it away for me. Right here. This break, change of character, very clean change of character right here. Now, I was waiting for an entry within this candle right here during New York session, which is the time that I trade. Okay, I was waiting for that. I believe we got like a seconds time frame in here, and I don't usually, I'm not usually looking at the seconds time frames like that, so that's not something I logically caught. That's not something I would say that I caught, because I wasn't looking at the seconds time frame. I was really waiting for something more, more prominent and more during, probably the 1 minute, 2 minute, 3 minute during that time. Let's go to the 1 minute, and we can see where the sales actually happen here. So the first thing we're going to talk about is this fractal distribution. Okay, for those of you who can see it, it's right here. You can see this whole fractal distribution that occurred, right? So essentially, first we rated Asian highs, which is a very good sign. Okay, that's the first thing that draws you to this trade. We're rating Asian highs, rating liquidity from the Asian highs. That's good. All right, while we're rating Asian highs, we are making a distribution. What does distribution shows us? Distribution tells us that sellers are interested. Okay, some type of supply is getting into the market. All right, and do not forget, we are within this New York manipulation, this New York price action manipulation. So that's another confirmation for you, right? So essentially, and there's two entries to this, so I'm gonna show you the other entry, which will probably be more probable. If you missed the fractal distribution, the second entry you couldn't have missed, right? So essentially, I can go through this really quick. We have our buying climax secondary test. We have our up thrust here. minor sign of weakness right here. This was our range. This right here is our UTAD. Right there, you see we break this low, which creates our change of character on a fractal time frame, and your entry is out of this candle right here. You can see this is right here. If you guys can see it clearly, this is your last unmitigated candle. Stop loss at the top of the wick, and there's your trade. Let's say 4.5 pips. And then your target may vary, right? You could have targeted this low here. You could have targeted, let's say, if you wanted to be on a higher time frame scale, if you wanted to target more of a larger area, you could have probably targeted these lows, or you could have targeted this demand zone, or most likely you could have just targeted a new low, right? Depending on the level of trader you are, depending on how you trade, whether it's intraday, swing, or whatever the case may be. So that's one entry, right? Next entry, which is probably the most easiest entry, is just taking the trade off the distribution itself. So after you identify this distribution that occurred here, what do you have to do? Well, essentially, we wait for a change of character. Here it is, right here, right? So essentially, what we can say is this is the low that created this new high. So in order for us to look for sales, we need this low to be broken. So that identifies a change of character, okay? So once this low is broken here, you have another change of character. Now what do? You look for the unmitigated candle or the unmitigated zone. All right. Now your entry could have been at the open, or it could have been at the 50%. So let's say you take the 50% of this area here, which is probably just a candle on a higher time frame. Let me delete this real quick. It's probably just a candle on a higher time frame. And 50%. Your stop loss at the top. Boom. Now, in this case right here, this was a close one. You actually did not hit stop loss at all. If you guys can see it, it's actually, let's see, 4 pips away from hitting stop loss. All right. Plus, you have spread as well. So you would not have hit stop loss on there if you correctly placed your stop loss above the area, which is where you're supposed to place it anyways. So essentially, you can see the potential like this. You guys know exactly what I just said earlier. You could target this low, the other low, or the main low, right? So that was the 2 trades here that was a potential catch during this London session. And there's also a fractal distribution in here. For those of you that are in the mentorship, we can also identify this fractal distribution in here as well. So that's pretty much it. That's the video for you guys. Learn when to trade and when to not to trade. You have to know when supply is actually in the market and when supply is not in the market, right? Look for that momentum. Look for the market to prove to you that it actually wants to sell and it actually wants to buy. Okay, so that's pretty much it for this video, guys. If you have any questions, like I said, you can contact me on Instagram, Telegram, or Discord if you somehow find my Discord, right? Whether you're in the mentorship or not. Most likely, if you're not in the mentorship, you probably won't find my Discord. So, I mean, Telegram, Instagram is going to be your best ways of contacting me. If you guys have any questions, let me know in the comments, and I will see you guys in the next video. Peace out.